set a benchmark, right, of how we should approach ratios going forward now.
Yes.
Okay, so let's check question number 1. They want us to calculate gross margin. Ne?
Yes.
Okay, so if you check here on my notes, I'm saying if you see anything that says margin, right, you should know that you always divide it by revenue. Anything that says margin.
All right.
Right? So you have the usual ones. You've got a gross profit margin and a net profit margin. But you can calculate your EBIT margin, your EBITDA margin. You know, the list is endless. But anything that says margin, it's always divided by revenue.
Okay.
Okay. So from our question, the margin for 2015, it was given, it's 41.85%, right?
Yes.
And I guess you can see the numbers, the revenue for this year, it's 23.7.
Yes.
And then the gross profit, it's 10.4.
Yes.
Right? And then we will take 10.4 divided by 23.7. We get how much? We get 43.88.
Yes.
So the first thing is that the ratio decreased from 2015 to 2016, right? Actually, the proper comment that you use is the GP margin ratio deteriorated from 2015 to year 2016.
Okay.
Right? And then now, you can now start to look. No, sorry, it improved. Sorry. If it decreased, yeah, it deteriorates. And then if it increases, it improves. That's the wording that we use now.
Okay.
All right. So now, we are now, remember we said we must look, this is a symptom. This is a result of something. Né? We must now try to check what could be the reasons for this. Right?
Okay.
So I had a few points that I identified. Remember, they said the company maintained healthy relationships with suppliers.
Yes.
But how does that improve revenue? It improves revenue in the sense that we know that we're not going to be out of stock.
Yes.
We know that if a customer wants something, it will be in store. We can be able to do repeat sales also because we have all the products in the warehouse.
Okay.
Right? They also spoke about robust marketing.
Yes.
Right? Robust marketing meaning there could have been more awareness of the products that we sell in the market, my friend.
Okay.
That can increase the number of customers that are buying our products.
Yes.
Right? They remember they also spoke about products that are sold at a higher margin.
Yes, they did.
Right? They also spoke about shops that were opened.
Yes.
Okay, so these are all the reasons that could have made our GP to go up.
Okay.
Are you with me?
Yes, I am.
Also, another thing that you can put here, it's the discount. Right?
That's what
because remember, they said we have maintained very good relationship with our suppliers and we did get some discounts. And your discount affects your cost of sales. Your cost of sales will go down.
Yes.
Are you with me?
I am.
So do you see what we're talking about when it comes to commenting?
Yes, I do.
Okay. Then we've got EBIT margin. EBIT margin, remember we said anything that says margin, we divide it by revenue.
By revenue.
Okay. So your EBIT for 2015, it's 13.66, right? And then for your current year, all right, with this one, I will have to assist you there in calculation, right?
Okay.
Remember our gross profit, it's 10.4,
Yes.
right? And then you've got, if you check here, this one, let's go back to our question. Okay, you've got gross profit of 10.4.
Yes.
Right, and then you've got other operating income of 1.5. We add
Yeah.
that, right? Remember, what is EBIT? It's earning before interest and tax,
Okay.
right? And then a question can be asked, but master, why are we excluding this one, the other income, right? They gave us a note or note number 2. Ne? Are you
Okay.
there?
Yes, I am.
On note number 2, they said the other income relates to dividends received from investments,
Okay.
right? So
Yes.
this is not operating income.
Oh,
Are you with me?
yes. I
It's
am.
not income that was made from the operations of the company. This is
Yes.
other income from investment.
Okay.
That is the reason we are excluding it from calculating our EBIT calculation.
Okay.
Then you will deduct your trading expenses. Then you will get your 2.9, your 2.9 divided by 23.7, you get how much? 1224, right? So now you are trying to understand if this ratio increased or decreased. Please understand EBIT, its earnings, understand it as a profit,
Okay.
right? So what does it mean? It means this ratio deteriorated.
Yes.
And what could be the reasons? The reasons, remember, we had a cost of new stores,
Yes.
right? So their operations, the operational expenses of the new stores could have been high,
Yes.
right? We also have cost of marketing.
Mm-hmm.
That could be, those could be the reasons why our earnings decreased.
Okay.
Are you with me?
I am.
Okay. Then for number C, I don't know why did I calculate number C. Number C once, let me check. EBITDA margin, right?
Okay.
So for your EBITDA, the only thing that we can add there, remember EBITDA, it's earnings before interest, tax, depreciation, and amortization.
Okay. I'm trying to
Right?
note.
So your depreciation and amortization was given as 500.
Yes.
So what you will do there to your 2.9 is just 2 plus the 500, and then you divide it by your revenue.
Okay.
Are you with me?
I'm adding that to what?
You're adding it to your EBIT. You plus the 500.
Okay.
So this is what you will do, right? So it's going to be your 2.9 plus the 500 for depreciation. Then you divide it by 23,700.
Okay.
And your reasons will be the same as these ones because EBIT and EBITDA, they are trying to get the same thing.
Okay.
Are you with me?
I am.
Does it make sense?
It does.
All right. Then for your number D, they spoke about your net profit margin. You also divide it by revenue.
Yeah.
So for 2015, it's 7.7. For 2016, it's 8.9.
8.9.
Right? So remember, they also gave us that other income that was coming from investments.
Okay.
Right?
Okay.
So that could be the reason why your net profit margin is higher.
Okay.
And then they also spoke, if you check on note number 2, let me show you. Where is my question? Is it this one? No, it's not this one. Okay. They spoke about, if you check on note number 4, they
Yes.
say the finance cost for the year amounted to 1.2 billion, right? And then the interest income was 200 million, right? And if you check the net, right, the net finance cost, it's 1,000. So you can see
Yes.
that the finance costs were less compared to income.
Okay.
Are you with me? So that
am.
could be the reason also of your net profit going up.
Okay.
Ne?
Yes.
Okay. And then you've got effective interest. Your effective interest, it's just your tax divided by your profit before tax.
Okay.
Actually, in these ratios, this was the most interesting one for me, my friend.
Which one? F.
The effective tax.
Oh, E.
Yeah. You know why?
Hmm?
Because if you check our effective tax, right? Last year, our effective tax rate was 27%.
Yeah.
This year is 30%.
It's how much?
30%.
Oh, okay.
How did we get that? Can you see that the profit before tax it's 3,000?
Yes.
And then your tax it's 900.
Yes.
So if you divide 900 by 3,000, you get 30%.
Okay. Okay.
So can you see that our tax expense increased?
Yes.
And I was asking myself, why would the tax expense increase? Right? And I thought that, remember that these guys, they opened new stores.
Yes.
Right? So they could have bought a lot of equipment or buildings or other things, and those expenses were disallowed by SARS.
Oh, okay.
Can you see that? Right? And for that reason, the blame goes to management, that the management did not plan properly. Are you with me?
I am.
So the other reason for this tax to go up, it could be lack of budgeting skills from management.
Okay.
Poor planning.
Yes.
Yes, one thing that I've learned, Lungile, is that in a business, my friend, we try by all means to not leave anything complicated. Right? Because remember, if anything is complex, it clouds decision making. We're not going to be able to make proper decision making, my friend, if there's some complexities.
Okay.
Right? So that's why we will do something like a budget. A budget, my friend, it's a map. Are you with me?
Okay. Yes.
So you cannot, like this other client of mine that I work with now. My friend, it's impossible for us to receive an invoice in a month, maybe let's say, of 50,000, and we are not aware.
Okay.
So, meaning there is proper planning from the beginning of the year.
I see.
So if ever I have to pay an invoice of 50,000 and I don't this month, that is a big problem. It means whoever the account manager of that supplier has issues.
I see.
All the expenses have to be budgeted for. And that difference, my friend, of 3% from 27 to 30%, it might look as if it's a small percentage, but we are talking of billions here. So that could be a material amount. Do you understand?
Makes sense. I do.
Okay. Then for number F, we've got bad debt as a percentage of sales. Last year it was 652, right? And then this year it's 6.2%. What do? We just divide our bad debts by our sales, right? But remember, this is credit sales, not just sales. Credit sales, because it's in relation to bad debts.
Okay. Yes.
Okay. So with this one, you can see that, okay, the percentage went down. So in other words, if you want to interpret it, you can say your credit losses, they decreased, which is a good thing.
Yes.
Right? What could be the reasons of that? It's improved collection processes. Customers taking advantage of discounts and paying earlier. Stricter collection policy. Can you see that?
I see.
Okay. Then lastly, we've got your total operating cost per store. Okay, for 2015, it was 2.42 million. And then for 2016, what we're going to do, we're just going to take our operating expenses divided by the number of stores. Okay, and then we're getting 2.90 million, which went up.
Okay.
Right, what could be the reasons? Remember, they opened new stores, and in those new stores, it could happen that they bought equipment, and then that equipment, there's depreciation, increment of depreciation can also be the cause there.
Okay.
Are you with me?
I am.
This is what we prepared for you today. Any comments, concerns, additions?
Okay, so I don't have much, except for I didn't get F correct. So now it's correct. Now I see what I made wrong.
Okay.
I think you are making it easy for me to understand that this analysis thing.
Okay.
Yes. So yeah.
All right.
If you if you can share me those notes so I can go through the notes before I go to bed tonight, and then I'll try to do B.
Not a problem. So tomorrow we'll continue with the rest because we have dealt with all the background, right? So it will be easy for us to go through those ones.
Okay.
It will be very easy for us to go through the remaining ones, and then on Thursday and Friday we do costing.
Costing. Okay.
Yes. So you can see that in a week we can do 2 questions, one for finance, and then one for
Costing.
yeah, of which I think it's fine.
It is.
You know, it's fine, but that actually, I don't know what it means to you, but you can see, right? Because for me, you know, this exam that I was sharing with you, right? Actually, let me stop the recording so that